Good evening, everyone. Hope you had a great evening. When I got back last night about 7 o'clock from the gym, it was 80 degrees still on the deck and 70 when we went out. I took Henry out for his romp. So we're definitely riding about 15, 16 degrees higher than normal. You can see the big bulge in the jet stream, the high over the west. Jet stream going up into Canada, bringing the warm weather up, and then the cool weather east of the Mississippi. So if that continues, we've had the earliest 100-degree weather out west that we've seen in a long time, that the summer could be pretty hot and we could have a pretty dry spring. We need that interplay with a jet coming up and back, moving up north and south to bring moisture to the Central Plains. So the wheat crop is becoming stressed. Now, the overnight indexes went down. There was a flash crash in Japan. The Dow was off over 230. Instantly, it came back. So Japan's markets were down. China's were up. Europe's markets were up. And our E-mini hit its lows early and then has come back up and is around 2060. The financials are pointed higher this morning. The play yesterday was in calls in both the 30-year and the 10-year. So here we are trying to trade higher. Looking at the F1 screen, you can see basically 2904 to 2912 is where resistance is. If we get through that, then we're right back up to 130. So we have a market that is pointed up, and we're probably going to get a pretty good test of resistance this morning before it's all said and done, before it resolves itself. So we'll take it back here. Okay, looking at the action on the 25th, you can see if we get through 129.04, 05, then 29.8.5, then all the way up to 29.12.5. And structurally, if you're a seller, the high volume number is 2.5, most recent in the market's memory 3. So selling 2s or better structurally is where you'd like to get a short off. And you can see that resistance really begins to start at 8.5 to 12.5. So we're pointed higher. We got this little high volume node. No reason not to think that we're going to trade up a little bit. So 3s to 7s leaning against that 8.5 high. Then 11 to 15 leaning against the 12.5 high will be sell 1. On the buy side, 25s to 29s. And then 21s to 17s. Enough uncertainty in the world that I don't think anybody dumps their treasuries. ADP, 230K. If, as forecast, a negative for financials. ISM manufacturing. At 52.5. Markets, PMI, manufacturing PMI is better. For a while there, these the markets numbers really reflected the macroeconomic news, but they haven't of late. The automobile sector is under pressure. Okay, construction spending, I've seen plus 0.2, minus 0.2, so we'll just put construction spending unchanged. So the focus will be 1, ADP, and then number 2, ISM manufacturing. And right here, resistance starts at 2.5, so we're playing for it to be a little bit higher for them to get stops over here. Above that, we know they're there. and gets down to which way the E-mini is going to go, how the E-mini is going to react to this type of news. Okay, looking at the 30-year. Non-spreads strengthened overnight, as you can imagine. Looking back, we have this little high here at 18, then we jump up to 26, 29. So if we get through 20, the market's head up. I think we can go a little higher. 23, 27, we'll pick up that area. And then 31 to 03. On the buy side, the breakout came from 10. We're at 18, so 9 to 13 is buy 1. The ADP number probably will take us back, and then 1 to 5, which is what I like better. We got this volume right here for buy 2. And it hadn't been too difficult for the markets to reach our number 2 points. So gold was really quiet overnight, not much going on. Saw an interesting article out there that Yemen would be Iran's Stalingrad. I mean, that's, you talk about literary license. Because Iran gets other people to do most of the dying for them, I don't see how that could be true. Iran, back in the old days, it used to be Russia was behind all the terrorism and all the fighting and the rest of it. In fact, Russia trained all these people how to do it. Eastern Germany, East Germany did it. That was their surrogate, so Russia could say, hey, these guys did it, not us. And since 1979, Iran has gladly taken over that role as the, the fomenter of chaos, murders, revolt everywhere. I don't see how Yemen could take Iran down any more than Syria could take Iran down, or Iraq now, because the United States has ceded pretty much influence and control of Iraq to Iran right now. So the fact that Iran is stirring up trouble, trying to create and bring more power to themselves, I mean, it doesn't fool anybody, but they do it the right way. Somebody else dies for them. They don't die for themselves. So Yemen's not going to take Iran down or put a dent in it. It'll hold the rest of the world's forces down, not theirs. Okay, we left yesterday wanting to sell basically against 90, and then picking up this area up in here, the 93, 95. That still looks good. I don't think there's news out there. 80 to 82 is a good buy. We had 80, 75 to 80 was support last night, and it worked out pretty well. So 75 to 80 is support. Resistance is, say, 90 to 95. Okay, the euro came back a little last night. We wake up in the morning with some articles really talking about how it wouldn't be a bad thing if Greece left the European Union, and it wouldn't, except for if you live in Greece. And the adjustment, the abrupt adjustment that you're going to have to make, I mean, it would be catastrophic for that country. But it's a move that if they could figure out how to do it gradually over time, they would do. The problem's not Greece, Ireland, or Portugal. The problem is Spain and Italy. So the EU, the European Central Bank, has to be really, really careful of the deal they negotiate with Greece because of the potential deals that they'd have to negotiate with Italy and with Spain, which they can't afford to absorb. So we've got basically 25 held overnight. We're at 57, so our 20 to 30 buy looks still reasonable. And then 107 for buy 2. 75 looks like a reasonable sell for sell 1. And then sell 2 for 108. Anytime we can get a substantial rally, sell it, in my opinion. Okay, crude's not signaling any big unrest in the Middle East, and it hasn't. I mean, the new war that's broken out, or wars, potential wars that have broken out, really haven't taken higher for very long. We had I think a 1.5 day rally off of Yemen, but we're right back. So I think the world is looking to sell rallies in crude still, and the reason for that is oversupply. We certainly like the short side. Okay, high volume number up here at 48, at 47.40, so 75 to 48, sell 1. 48.25, 48.50, sell 2. Looking for a build of 4 million barrels in crude inventories. Got to be, we're pointed lower, so 46.75, 47 by 1. And by 2 would be 46.25, 46.50. Okay, the E-mini. I think yesterday's close is going to be the key to which way it's going to go next. Most of the articles that are being written right now is tops in, we're in the correction in a bear market. You know, bad news sells. That's how you get people to read your articles. The macroeconomics certainly support selling. But that doesn't mean that it will sell because of the Fed. But you can see that we had this little volume node right here late yesterday, and we've got volume up at 70. So we got volume at 60, we got volume at 70. You can see we have a pretty clean break in the market over here at 60. And we're currently at 53. Last rotate up stopped at 59.25. So based on the fact the ADP news will come in at plus 230, that should give us a chance to get up here. And you're selling against 60 or you're selling against 70 is what it boils down to structurally. Last rotate up in M period stopped at 70. N period stopped at 64. We've got the mode at 66, so 64, 66 would be sell 2. Not going to be too difficult to get up there, but to me, if we can't get above 60 today, this market is a sell, and we'll be looking for that. On the buy side, we had a London low at 46 right in here, so 46, 47 is pretty good support. Had the breakout from the overnight action at 50, and we're at 53 right now. So I'm going to put down this 49 to 51 off the ADP number. We're going to adjust after that because it's a pretty good number. Like the idea of getting short, especially with yesterday's dump late in the session and the volume that we had to the downside overnight. So this market's trying to sell. Now, whether it can sell or not is another matter. We've got the Fed to contend with, and now the Fed does not mind a lower market. They don't mind selling as long as it's orderly. They do not like the bottom coming out of the market or flash crashes, so they won't let that happen. But the market can correct into the Fed. They're most happy with a 50 to 70 point corrections. Short covering rallies tend to stop nowadays at 30 to 40. So orderly selling, 150 point trading range would not make the Fed mad. The key is, how do you stop selling once it gets going? And they can do it. They can buy everything in sight, so you get that first wave of selling, and with no follow-through, then the market, when they trade longs and short covering, is what takes us back up to where the selling began. So this 60 area is a pretty clean break in the market, and then 70. So 60 to 70 is our prime sell territory. Take at least 20 minutes to get everything going. I will do that. The ADP number is up in 11 minutes. We'll come back and comment on whatever that number might be. Be with you as soon as possible.